The world of Forex trading is filled with complexities and nuances that can seem overwhelming to novice traders. While mastering the basics is essential, experienced traders often employ advanced techniques to gain a competitive edge in the market. In this article, we'll delve into the realm of advanced Forex trading techniques, unveiling the secrets that seasoned traders use to navigate the market with confidence and precision. 1. Fibonacci retracement levels. One of the most powerful tools in the arsenal of advanced Forex traders is Fibonacci retracement levels. Based on the Fibonacci sequence, these levels are used to identify potential support and resistance zones in the market. By plotting key Fibonacci levels on a price chart, traders can anticipate potential reversal points and plan their trades accordingly. Fibonacci retracement levels are particularly effective when used in conjunction with other technical indicators and analysis techniques. 2. Harmonic patterns. Harmonic patterns such as the Gartley pattern and the butterfly pattern are advanced trading patterns that occur naturally in financial markets. These patterns are based on geometric proportions and Fibonacci ratios and are used to identify potential reversal points and price trends. Advanced traders utilize harmonic patterns to anticipate market turning points and enter trades with favorable risk-reward ratios. Mastery of harmonic patterns requires a keen eye for detail and a thorough understanding of market dynamics. 3. Elliott Wave Theory. Elliott Wave Theory is a complex but powerful tool used by advanced Forex traders to analyze market cycles and predict future price movements. According to this theory, market trends unfold in a series of repetitive wave patterns, each consisting of impulsive and corrective waves. By identifying these wave patterns on a price chart, traders can anticipate the direction and magnitude of future price movements. While mastering Elliott Wave Theory requires time and dedication, it can provide valuable insights into market behavior and trends. 4. Market profile analysis. Market profile analysis is a sophisticated technique used by advanced traders to gain a deeper understanding of market structure and dynamics. This technique involves analyzing the distribution of volume and price over time to identify areas of value and significance in the market. By studying market profile charts, traders can identify key support and resistance levels, gauge market sentiment, and anticipate potential price movements. Market profile analysis provides advanced traders with a unique perspective on market behavior and can help them make more informed trading decisions. 5. Order flow analysis. Order flow analysis is an advanced technique used by institutional traders to analyze the flow of buy and sell orders in the market. By studying order flow data, traders can gain insights into market liquidity, trading activity, and the behavior of market participants. Advanced order flow analysis techniques include volume profiling, depth of market analysis, and footprint charts. By incorporating order flow analysis into their trading strategies, advanced traders can gain a competitive edge in the market and capitalize on short-term price fluctuations. Conclusion: unlocking the secrets of Forex trading requires a deep understanding of market dynamics, technical analysis, and trading psychology. By mastering advanced techniques such as Fibonacci retracement levels, harmonic patterns, Elliott Wave Theory, market profile analysis, and order flow analysis, traders can gain a competitive edge and navigate the Forex market with confidence and precision.